South Africa's financial and economic snapshot, the 3rd of June 2026. South Africa's financial and economic landscape on the 3rd of June 2026 was shaped by a mix of cautious economic data, a dramatic split in fuel prices, and a significant milestone on the Johannesburg Stock Exchange, JSE. The latest economic indicators suggest that the country's recovery remains fragile. The S&P Global South Africa Purchasing Managers Index, PMI, slipped into contraction territory, falling to 49.6 in May from 51.6 in April. It was the first reading below the neutral 50-point mark in 5 months, with businesses pointing to weaker international demand, severe weather disruptions, and rising fuel costs linked to tensions surrounding the US-Iran conflict. At the same time, Statistics South Africa reported that the economy expanded by a modest 0.5% quarter-on-quarter in the first quarter of 2026, a slight improvement from 0.4% in the final quarter of 2025. However, much of this growth reflected a decline in imports of machinery and equipment rather than stronger domestic economic activity. Inflation expectations also moved noticeably higher. The Bureau for Economic Research's second quarter survey showed expected inflation rising to 4.4%, up from 3.6% in the previous quarter, largely driven by higher global oil prices. Reflecting these pressures, the BER lowered its forecast for South Africa's economic growth in 2026 to 1.3%. Consumers woke up to one of the most unusual fuel price adjustments in recent years. Petrol 95 ULP increased by R1.43 per litre, lifting the inland regulated price to a record R28.06 per litre. The increase was mainly the result of the reinstatement of R1.50 of general fuel levy relief and a higher slate levy. In contrast, wholesale diesel, 0.005%, became R2.62 per litre cheaper, bringing the inland price down to R29.26 per litre, as international diesel prices eased on the back of weaker seasonal demand in the Northern Hemisphere. Meanwhile, the rand provided some support by strengthening slightly, averaging R16.52 to the US dollar during the review period. Corporate developments also made headlines. French media company Canal+ officially began trading on the JSE, marking an important step in its long-running plan to complete the acquisition of MultiChoice, Africa's largest pay-TV operator. Cabinet also approved a revised industrial development strategy focused on 3 priorities: decarbonization, digitalization, and diversification, with the aim of strengthening strategic industries such as automotive manufacturing, steel, mining, and agro-processing. Another positive development came from Telkom, whose strong financial performance for the year ended March 2026 is expected to provide the South African government with approximately R559 million in dividend income, offering a welcome boost to public finances. Overall, the outlook for monetary policy remains relatively stable. Although inflation expectations have risen, most economists expect the South African Reserve Bank to leave interest rates unchanged at its July meeting, as easing global oil prices and improving supply chains following recent ceasefires are expected to help limit further inflationary pressure.